All right. Good afternoon, folks. Happy Tuesday. So today's topic is about entity structure. I'm going to talk a little bit about the different types of entity formations that are out there. And I'm going to try to see how I can help you visualize and connect this entity types of structures to the different stages of your business today. And let's jump right in. So our firm CEO and managing partner is Ying Sa. She's the lady that you always see and have a wonderful time enjoying her videos since the day one of the COVID-19. She is currently sitting on the National Taxpayer Advocacy Panel, and it's a fancy title for a person that represents and helps taxpayers on behalf of IRS and advises IRS on how to best work with them. So to contact Ying, feel free to go to our website, and at the end of our slides today, I'll show you how to go and set up an appointment with her or any of the partners here at the firm. So Ying's book is coming out here soon, so I want to make sure that you have a chance to learn about it. I'm sure you saw her first book, or maybe even have purchased her first book off of Amazon, but the second book, it will be all about growing your business, when the first book was all about starting your business. So please make sure to check this out. We'll make the announcement. You'll be the first to know if you continue to join us on our webinars, and keep an eye out for this information to be posted here soon. So I have to read this disclaimer. You've heard us read it tons of times, but it's part of our no responsibility disclaimer. So Community CPA, as part of our services to our valued clients, are providing these seminars in order for businesses to cope with the current pandemic and after the pandemic effects. We're not responsible for any damages the attendees may suffer as a result of following any of the advice or information provided here. So although we are doing our very best to stay informed, the current situation is very dynamic. It's always changing. The information could change at any time without any notice. So we want to make sure you know that. Our information and advice are not legal in any nature and should not be construed as such. So please consult your legal counsel if you should need any legal advice. Common business entity types that are out there. These are the most common, most popular. There are more different kinds out there, but today we will talk a little bit about these 4 different types. It's the sole proprietorship, the 1065 partnership, S corporation, and C corporation. And so this first type, sole proprietorship, you can imagine is the very earliest stage of your business. So think of the sole prop, and then the next step and the next stage will be to maybe create an LLC. And the next step will be to be an S corp. And then the next step could be a C corp. And so this is the growth chart of a business that we're going to continue to reference back to. And the sole prop is a perfect entity for you if you're just not sure. Is my business going to make it? I'm going to do this market test, and I'm going to try this out. I'm going to try this product, and I'm going to see how the public responds. Sole proprietorship would be the perfect tool to do that. You know, just not sure, but you want to try it out, and you just going to see how it goes, right? So sole proprietorship will be the perfect entity to do that. And it is you, yourself, as the person that's representing the company, and the company is not separated by any means because you haven't created a legal entity at this point. So please make sure to know that you have to be very, very, very careful when you're a sole proprietorship, because you're doing it all under your name. You're doing it all under your personal social security. And so, yeah, sole proprietor's tax return is reported inside your personal taxes, right? And you don't have to register it in any State Department. Some cities, they allow you to register it with the clerk's office, and a separate EIN is not even needed. I know if you go on to the IRS's website, you can apply for one as a sole proprietor, and you can feel free to do so. But by no means does it mean that you have a separate company. Okay, everything falls under your personal and your personal name and your personal taxes, and so this is what a sole proprietor is. Okay, the pros and cons of Schedule C, which is the type of form you use if you're a sole prop. Okay, if you're a sole proprietor. So the pro is, of course, the easiness in setting it up. Owner maintains 100% control and ownership of the business. No double taxation, only one tax return to file, right? The con, there's a lot of risk. This is you. You're doing the business under you and your personal name and your personal social security number. So there's that risk. Solvency issues. No room to grow. You can't add partners. You can't do an election. You can't change your entity type. You are a Schedule C and filing taxes under your personal taxes, okay? And of course, the self-employment tax. This one's big because self-employment tax will hit you with a 15% tax of whatever is your net profit. So we'll talk more about that and talk about how other types of businesses and other types of tax entities will help you get away from self-employment tax. So the next type of business, right? The step up, okay, will be to create an LLC. And if you have a LLC, here we're talking about a multi-member LLC. I want folks to know, if you're a 100% sole member, one owner LLC, you are treated no differently than your sole proprietorship in terms of the tax lens. If you are looking at a person that has a single member LLC, you would treat them just the same in terms of taxation and paying the 15% self-employment tax. Okay, and I want you guys to keep that in mind. And also, your tax return will fall inside your personal taxes if you're a one owner LLC, one member LLC. So if you want to get away from doing that, okay, and you say, Dan, I want to file my taxes separately. I don't like to have my personal business all in one tax return. I want to keep them separate. This would be your next step, to create a multi-member LLC. Just like its name, it means you need to bring in another person. You can bring in a spouse. You can bring in another partner that you work well with and you share this common vision with, okay? And this will be an LLC, multi-member LLC at that. And partnership tax return will be the tax return you would file completely separately from your personal taxes, your business taxes. And this partnership is a flow-through entity. Okay? Flow-through entity simply means whatever comes into the business and whatever is left and whatever is produced as a net profit or a net loss flows to your personal tax return as a gain or as a loss. And so if you have a gain, you'll pay taxes on it. And if you have a loss, it'll offset your profit, your personal income, and may generate refund. Okay, so a LLC has different kinds. There's the LP, which is the limited partnership, and there's the limited liability partnership that's out there. So LLC can have unlimited number of members, as many people as you like to an LLC. And the different forms of 1065 will, hold all your different transactions in your business. It can be the different income, expenses, and will pass through and flow through to your personal taxes. Okay. Talked about that. And the way it will do that is through Schedule K1. K1 is basically like the owner's W-2. Okay, if you have a K1, just simply means you have a business and you have an ownership in an LLC. S corp is the same way, and we'll get to that here just in a minute. But it is the way you'll report your gains and losses from your business in relation to your amount of shares and ownership of a business. So keep this in mind. And multi-member LLC, I know we're going to jump into the pros and cons. Here you'll realize that there is the flow through income taxation for all partners. That's through the K1 we talked about. Partners can pool resources and share the financial obligation and risk here rather than facing it alone. So that's a pro. No rigid obligation like the corporate structure might have, and individual K1 to all its partners that share in the profit and or the losses. So the cons are each owner is equally responsible for the debt and the loss. Okay, and another con would be that you're liable for the debts and actions of your partner. So don't go into business with someone that you just met, right? You really have to do your research. You really have to make sure that you've known this person and can trust this person, because anything that he or she does, you are responsible for, and vice versa. Okay, and limited capacity to raise money and attract investors, and informational return will be needed to file in addition to the personal return. So just keep in mind, you're going to have to start filing taxes separately. And so there's that additional responsibility and professional fee that you'll incur if you have a partnership. Okay. So one thing here it doesn't mention, but I want to talk about right before this next slide is how the taxation might work. And this is important. Okay. This is important. Let's say you have a LLC and your partnership with your wife, your spouse, because you have this, let's say, rental property, and there's a thing called passive and active status when it comes to LLC. LLC can do wonders for you if you do this right, and you can consult your tax advisor for this, but there's a thing called active and passive. How this works is simple. Okay, remember the taxation I mentioned earlier when I talked about the sole proprietorship and the self-employment tax, right? So the IRS rule is that if you're a passive owner of the business, your shares and your profit, okay, is exempt from self-employment tax. Self-employment tax earlier I mentioned was what? 15%. 15% additional tax you need to remit on top of your income tax that you need to pay on your personal taxes. So let's give an example. Let's say there's a $1,000 net profit for the sake of easy calculation. At the end of the year, there's $1,000 and that you made. You and your spouse have 50-50 ownership. Okay, 50-50 ownership. And let's say you are the one running around and sweating and working to, get people in your rental property and doing all these stuff, when your spouse has a full-time job, doesn't do anything but support you, mentally, and also from time to time checks the balance on the bank account and adds money in there if you need, but is not really active in the business. And so they would be a passive member of the business. So what that would mean is your 50%, which is equivalent to the $500 profit you made, is will have the 15% tax on it, whereas your spouse and the $500 that they would have in K1 will be exempted from the 15% additional tax. So there you already saved some taxes. If you know what you're doing and can use the different statuses the LLCs make available for you. So just keep that in mind. And we're going to move into this S corporation, and that self-employment tax is key, because S corporation, you will realize later, don't pay self-employment tax. And so that's why a lot of people as a small business and would become an S corporation. Then your question to me would be, well then, Dan, why won't people just all create S corporations and do away with the LLC altogether? That's a great question. And the reason for that is because S corporation has its own requirements to be an S corp, and it has the different criteria you have to follow, and so it might not be best suitable for you. So let's talk a little bit more about this S corp. And the S corp uses its form 1120S, and this is the type of the tax return that you'll need to file as an S corp, and it'll use that form to report income, losses, and dividends as an S corp business. So the date you elect the S corp status, this will be January 1st if your business operates on a calendar year basis, and you have to be, okay, you have to be on this calendar basis, because it's tied to your personal taxes, and your personal taxes, you already know, is on a calendar year, right? That's why we all file our personal taxes in April. So as corporation is eligible, domestic corporation that wants to avoid double taxation, wants to the shareholders and again to the corporation by electing the status through the form 2553. This is a loophole created for small business owners. A lot of times when Ying, our CEO and managing partner, comes on here and talks about the IRS, you'll hear her say stuff like IRS is probably the most fair government agencies you'll find in all the world. Okay, and we speak 11 different languages here, and we have about 11,000 clients worldwide. And what we have found is that if you understand what IRS can do for you, if you understand the different rules and properly, you can really reap the benefit, because you will realize that there are a lot of these different benefits that IRS created for small business owners. If you are in business and you can make good use of this, you can be in the business for a long haul. Okay, but if you don't, then you'll really be missing out on a lot of the different benefits. So this 2553 form allows you to go from a C corporation to an S corporation. So that is what an S corporation is. It technically stands for subchapter corporation. It is a subchapter of a C corporation. It is a loophole, again, created for you to reap the benefit of a small business. Okay. Eligibility, no more than 100 shareholders, one class of stock. Shareholders are individuals, not non-resident aliens, and certain trusts or estates. Okay, so let's talk a little bit about the pros and cons here. Pros: there's the potential tax savings, right? You don't pay self-employment tax at all. Remember, the LLC, you can be exempt from self-employment tax when you are a passive owner and a member of the LLC. But if you're an S corp owner, you will be exempt completely. Okay, and because the S corp is not taxed at the corporate level, S corp can result in significant tax savings to shareholders. It's tied to your personal tax rate. Okay, because just like an LLC, it is a flow-through entity. Whatever you make, whatever you lose, it goes down to your personal taxes using K1 again. The K1 is the same form you'll use as S corp, like you would for the LLC. And personal assets, business ones, are separated when it comes to business liability and it's easy to transfer in terms of ownership. If you decide to give your company to a relative or sell it to another owner, it's all easy to do when you're an S corp. Okay. Cons. It's less flexible. I would say those who run a S corp, they really understand that there's not a lot of flexibility when it comes to reallocating income and losses. Okay. Tax obligations. If you make a simple mistake with your taxes, you might lose your S corp status, and it's been done. And I've seen new clients come and say, "Hey, can you help fix this? I got this letter. I don't know what to do. I need my S corp status back." So it happens more than you think. The IRS pays more attention to S corp. So if you're like, "Oh, I'm so scared of IRS, and I just don't want any attention," S corp gets a lot of attention because of its strict rules and regulation. But if you have a good taxpayer and tax agency that's going to be able to help support you and help you with the S corp rules and regulation, then you have nothing to fear, right? Payroll requirement. This is a big one. You remember that question I asked, and I hear all the time, "Hey, Dan, why do people create LLCs?" And when S corp, sounds like it's a ton better. Right here, payroll requirement. Because not every business that starts and are wanting to run payroll, right? So this payroll requirement can be a big one because you need to run payroll if you are an S corp. And if you're not ready and you don't have the funds to do so, then S corp's not the one for you. So this again is a step up of the LLC. And a lot of times, I also tell people the reason why people don't know about S corp is because they never heard of the S corp, and only people who are in the business for a while might know about this. So if you don't have a relative or family member that tells you about the S corp, you probably aren't like, "Oh, great, this is the one I want." And a lot of times you go to lawyers, right? You go to lawyers to help create companies. And we have a legal team here too. But a lot of times, what do the lawyers say? "Oh yeah, the LLC is the easiest to form. This is the one for you." And it just like what they said, it's the easiest to form, and it's the simplest and quickest way to get a company. So LLCs quite popular, okay, and that's why. But here, I'm going to go ahead and add an insert about elections. If you're an LLC and you want to be an S corp, you can through election. That 2553, you don't even need to do it through a C corp to be an S corp. You can go right from being an LLC owner to be an S corp owner. So you just need to make sure you talk to a tax professional, or you can contact us if you need help with that election. We'd be more than happy to help. So you can make that transition without closing your LLC down and creating a brand new company. So that'll save you some funds and money. Let us know if you guys are interested in that, but election is the way to go if you are wanting to make that transition from LLC to S corp. Okay. Now, let's talk about the C corporation. When we think of C corporation, we're thinking of like the huge, large corporations like Apple, Wells Fargo, Walmart. And so, we are like immediately turned off saying, "Oh, that's not the one for me. I'm not that big." But, it might be the one for you. And so a C corp files its separate taxes, just like the LLC, multi-member LLC, and the S corp. C corp does too, but C corp is completely separate. So C corp, I would say, is like the highest level of the different entity structures that are out there. So imagine let's say sole prop is like a baby, like a toddler, just beginning to learn how to walk. And then your LLC, right? Your LLC is like your teenager, okay? And you're you're very much involved with them, and you still help them, and they might start earning money and working part-time, and so they might want to start filing their own taxes, but you're still ultimately paying for their taxes and everything, right? And then your S corp is like your college student kids, okay? And so they are, independent. They for sure are filing their own taxes, and but you still take care of them, right? You pay for their tuition, and you help them, with any tax payments if they have any. But C corporation is like your grown-up child who's, out of college and is married and has kids, files his own taxes, and pays hopefully their own taxes too. So you're completely separate, right? Completely separate. They do their own things, and that's what this is. You won't receive a K-1. You won't have anything flow through to your personal taxes unless you have dividend income you pay yourself with, or you have, of course, payroll, but it's completely separate, okay? And the tax on corporate level or corporate income is paid first at the corporate level, and again at the individual level if you get dividends. But you don't have to issue dividends. So that's the thing. I know this double taxation is a big thing when people talk about C corps, and they say, "Oh, double taxation this, double taxation that," and then they say, "I don't think I want to do that." A C corp, you will see here a lot of the pros, is really not a bad option because I would say double taxation and all those information is quite outdated. Okay, it's outdated. So the different pros are: owners are separate from the legal liability, so they're not entirely responsible when faced with legal issues or debt. A lot of people who have a lot of businesses and big businesses create C corps, and they want to completely be separate from the legal liability. So they file bankruptcy, and personally, they're not affected. Okay, ability to sell stock, which raises the likelihood of acquiring financial capital. The well-established structure with clearly defined roles, accountabilities, and agendas, and employees may have the option to buy stock at a fixed price and receive stock benefits. We couldn't make this table big enough, and we wanted to list more benefits, but we couldn't here. So let me go ahead and tell you some more. Another one would be that as a C corp, you get a lot of flexibility, a lot. So what I mean by that is C corp, I told you, is regarded as the highest level of the entity structures. So with that, a lot of times IRS assume and expect you to have your business taxes and your accounting and your books and your payroll all done professionally. So the amount of attention that you will draw is a lot less than a sole proprietor, than a single member LLC. Okay, so keep that in mind, because just imagine, let's go back to that example of the C corps having being used by these large corporations like Wells Fargo and Apple and Microsoft and all these companies. Do you think they have one CPA working for that huge corporation? No, they have a team, they have a firm. And so that's the expectation of a C corporation. And so there is that responsibility, but there's also that flexibility. And so just keep that in mind. And a lot of times IRS, when I'm talking about flexibility, also know that the C corporation exists to benefit the capitalists, the folks at the top, the folks at the top of the food chain, right? And so what they do is they want to make sure that you are taken care of. If you say, oh, I need to make sure I get this house because I'm going to use it for our employees, and we're going to have a, you know, a trip out there once a month or once every quarter to do team building and use it to get away from work and be rejuvenated about work and bring folks together and share a vision. And that property you purchased for your business, IRS won't even question. They'll say, okay, it's done. All right. Whereas maybe if you try to do that through like your personal taxes through the single member LLC, it could raise some eyebrows. All right. And they might ask you, oh, okay, can you prove this? Can you prove that? But C Corps are generally a lot more flexible because they expect you to have all those things, because they expect you to work with a higher level CPA firm or a higher level, tax agency that will make sure to have all your grounds covered. Cons: there's a lot of paperwork, right? More regulations. There's some less flexibility there, possibly of double taxation. Okay. Now, why I talk about this as it is kind of outdated is because a lot of people dwell on this fact that they have to pay corporate tax and then pay dividend tax. But like I mentioned earlier, you don't have to issue dividends. There are many ways as an owner for you to pay yourself. You can pay yourself through reimbursement. You can pay yourself through payroll. And so there are different ways that you can pay yourself. And I think we have a video on that you did. So want to make sure that you go back to our YouTube channel and see how you can pay yourself as an owner. But you don't have to pay yourself as a dividend. Okay. And also, a lot of times, your corporate profit as a C Corp can be significantly reduced because of the different benefits that you already have in place in the company that will help you to reduce your net profit, right? So a lot of the things that you might think twice about and not be able to include in your business taxes for a different structure, you can for a C corporation, with more confidence. So I want to make sure that you really think through about the C corporation pros and cons as well, seriously, without just thinking, oh, it's for a large corporation, I can't do this, and it's not for me, right? So these are all the different types of entity structures. I wanted to help you visualize it and make a connection to your personal and business venture and see if which different types of entities fit you the best in your stage. All right. So you want to consult a tax professional before creating a company. Having a proper house for your business is important to save on taxes and reduce audit chances. Okay. And yeah, this is what we always talk about and preach here at our company. We would be more than happy to consult you and share information with you. If you want to set up an appointment with us, you can go to our website, www.communitycpa.com. Click on appointments, click on contacts, and then reach out to us. And our calendars, I believe our partners' calendars are all available and in sync with our website. So you can book it right there and then and see when we're available. If you want more information, email Catherine@communitycpa.com. And we really appreciate you tuning in and seeing us on a regular basis to sharpen your knowledge. And the way you can do that is through just continuing to come visit our YouTube channel, consult with our partners and our managers. And the more you know, the better you will be in running your business. And that's why we're here doing this every single day, not just for your entertainment, but hopefully for us to grow together. So hopefully you had a wonderful time, and we really appreciate if you can subscribe and do the notifications. So whenever we post something new and you can't make it to our live session here, you'll be able to see it on our website and on YouTube and all of our social media platforms. So hope you guys have a good rest of your day, and thank you for tuning in. Bye.